Hi, this is Optimus Futures, and we're finally back with our weekly roundup of key futures markets for our viewers. Before we begin, we'd like to wish all of our viewers a very happy new trading year, and also remind you of the fact that the last couple of weeks we did not post these weekly videos, simply because the markets have just not been very liquid at all. We've been very volatile and not that predictable at all, except a few markets such as the light crude oil futures, a market that we're going to be looking at very shortly. But for the most part, the markets really weren't active enough for us to really evaluate any kind of short-term or long-term directional bias in them. But now with the new year rolling in, things are slowly starting to get back to normal. Liquidity and trading volumes should soon return, if not already for most markets. And so that means that we will have some normal market action resume for the fresh year. So we began our analysis as usual with the light crude oil futures market. So this has been one of those markets that still behaved pretty normally, despite the fact that we were pretty much sitting in the middle of the holiday period over the last couple of weeks. Let's quickly point out where we left this market and what we had basically predicted for this market before we pretty much went off for the holidays. So essentially we were talking about this wedge pattern that the market was sort of falling in, and we discussed how we suspected price to continue consolidating within this trading range and eventually break out either to the downside or the upside. That's pretty much what we saw over the past couple of weeks. We have price sort of bouncing off of this support trend line for the wedge over here. Price trickled up once again, not very strong dominant price moves as you would expect during the holiday period, and we pretty much just shot up. This was a very typical market action for the holidays, especially because lack of volumes can sometimes make price do really unpredictable things, but this was very predictable. As price hit this level, we did not find much resistance here at all for the fourth time, and price just shot up extremely strongly out of this wedge pattern, and we've just been able to post a very strong looking up move since then. A little bit. Okay, so essentially what we've been able to achieve from the breakout of that short-term wedge pattern is a move away from this very long-term resistance level that we've been discussing for this market a lot in the recent past. And that was essentially because we had a lot of consolidation, a lot of indecisiveness from the market at this level, and which is really to be expected when price is hitting a level as strong and as historic as this one over here. So finally we've seen a break to the upside and away from this level, but because this move was really just initiated over the holiday period, we do suspect that we'll probably see a pullback down to this level, around these levels I should say. Maybe up to these highs over here, maybe even to this former major resistance level, and test as a support, as well as gather some fresh order flow that could be sitting at this area. But again, it's really just dependent on how we see price unfold in the following weeks. But just given the fact that we had a lot of this movement being posted over the over the holiday period, when a lot of traders really weren't even active, it makes all that much more strong of a case for price to sort of pull back down again to test this area and gather some fresh order flow for the year. But either ways, we have a very strong upward bias on this market for now, simply because we're now safely away from this long-term resistance level and we posted new highs, and the market should continue to gain strength provided that this former resistance level over here continues to hold as support when price does make a pullback to it, and if at all it does. So the next market we're going to be looking at is the S&P 500 E-mini futures market, and this has been another of those markets that have been really normal in terms of the price action that it posted over the holiday period. So if you recall our last analysis that we made for this market, we had identified these continuous higher highs in how they were basically indicating that the market continues to be strong to the upside, And in 2018, we expect even higher levels for this market. And that's pretty much what we saw unfold throughout the holiday period as well. We have price going sideways a bit, and then a sharp spike down as price basically pulled back to these levels over here. Some former swing highs, short-term swing highs, I should say, and then just really bounced off of them very, very strongly. And we've really just been able to post a very strong move over the entire past week, and once again making a new all-time high for this market. So looking at the daily time frame here quickly, we can see that this market has just gone from strength to strength, and really just continues to post new highs, all indicate of the fact that this market is just still primed to go higher. We're looking at levels around 2,800 for the midterm if the momentum continues to be as strong as it is. Once again, because we have a lot of movement to the upside, strong movement to the upside over the holiday period, we do suspect price may want to pull back a little at the start of the year. Once again, we may need to get some fresh order flow into the market at levels lower. We understand how a lot of professional traders really wouldn't want to be buying into a market that's sitting at all-time highs, and so we may actually see a pullback into this uptrend at the start of the year in the following week or weeks to come. We're precisely looking at these former highs over here, or maybe even the midterm support and resistance level over here, for some fresh buy orders to come in the market and take this market even higher than where it is at current levels. So again, we have an upward bias for this market, which sort of just spills over from much of last year. And so really, we do not have a reason to believe that this uptrend, although it has been going on for a very long time now, we do not believe that this is going to end anytime soon. At least we don't have any technical indications to suggest that. Okay, so the next market we're going to be looking at is the gold futures market. You can see that over the past couple of weeks we did have a lot of gaps in this market, and some days where we had pretty much no action at all, and that's kind of expected during the holiday period, and which is why it's just best to not be trying to overanalyze the markets at least. But looking at the market overall, we still had price action unfold pretty much in a textbook style for this market. So essentially what we have here on this market is basically a support trend line over here that price bounced off on the third touch. So we had the first touch here. We almost made it the second time, but this was a real second test of the support trend line. And right here on the third touch, we basically bounced off of this level. It also coincides with sort of the mid-range level of this consolidation box that we had posted in the past. You can see that price has basically bounced off of this mid-range of the consolidation box a couple times in the past. And usually with these consolidation boxes, the mid-range is actually often very important. If we can just go back a little, we can once again emphasize the importance of the mid-range of the consolidation box. In a similar situation a while ago, so if you look at this consolidation box and we sort of just throw in the mid-range of this consolidation box, you can see that within the consolidation box we had price sort of bouncing off of the mid-range quite a bit, and once again, as price breaks out of the box and pulls back to it sometime in the future, we almost touched this mid-range over here, and we definitely touched it over here. So once again, these mid-range levels of consolidation boxes tend to be important support and resistance levels for price in the future, and that's kind of what we've seen over here as well. So we had sort of confluence with the mid-range of the consolidation, the box that we drew here, and the support trend line. That really made for a very strong bounce off of this level. Once again, we did not have a lot of liquidity as price trickled its way higher, and that possibly explains why we did not really hold up much at all at this former resistance area that we've been talking a lot about in the recent past when we were analyzing this market. We did have a daily candlestick that sort of just spiked up and closed bearish, but nothing much at all, no major forms of resistance at all. And so that really makes us believe that we may actually see price pulled back to this level in the coming week or weeks to come, and basically see if this level holds as support. It has really held as very, very strong resistance in the past, and if it does flip into very strong support, we can obviously expect price to bounce very hard off of this level and maybe even test this major swing high over here and possibly even break it in the coming weeks and months to come. But that will obviously remain completely dependent on how or what kind of a bounce we get off of this level when and if price kind of pulls back to this level. Of course, it may just continue trickling its way higher and test this level first before we see any kind of resistance come into the market. And we're kind of open to both scenarios, but we do suspect that since a lot of this movement was basically formulating over the holiday period, price may want to pull back in the early part of the year and basically get in some fresh order flow, even if price really wants to go higher for the initial part of 2018. So that said, we obviously have a long-term bias to the upside for gold now, just given the development that we've seen over the past couple of weeks in the holiday period. But we really believe that a lot will depend on how price kind of behaves as it returns and pulls back to this long-term resistance area, and also what it does when it actually hits this major swing high from the past. Okay, so we now look at the Euro futures market. This has been a market that over the past couple of weeks has posted a very strong uptrend as well, which basically laid its foundations at this crucial support area marked by the lows over here. So we basically had price bounce here a couple of times and almost like a triple bottom and just really take off from that point. And the strength of this up move can also be testified if you look at the fact that we really did not hold much at all as resistance over these past highs over here. So we did hold up a couple of times as price tried to pull back initially off of this level, tested it again, broke it, pulled back in the short term, and just really took off from that point on. Once again, this level itself has been very strong, and the fact that we had almost a triple bottom off of this support level confirms the fact that there was some really strong order flow to the upside coming in the market, despite the fact that we were basically in the middle of the holiday period, where you would typically expect low trading volumes and just a lot of increased volatility. That volatility sort of transpired into the market when we had such a huge gap at the start of last week. And interestingly, we haven't really closed that gap just yet. So we sort of gapped up and then continued on higher, even breaking past these former highs, as we just discussed. And we basically were able to create a new high for this market as well, which is really interesting given the fact that if we look at the daily time frame, we're actually at some very significant resistance, long-term resistance level over here. So you can see that we have multiple highs posted here in the past, just above the 1.2 round number, and that's pretty much where price is holding up right now. And although we do technically only just creeped higher above these former highs so as to make a new high for this market, but we wouldn't really say that this market has really just cleared past this former resistance just yet. We still have a lot of consolidation in general over here, although we did see some strong moves in the past couple of weeks. Looking at the bigger picture, you can see that price is still sort of consolidating at these former highs over here, especially given the fact that we haven't really closed that weekend gap that we just discussed on the 2-hour time frame. We do suspect the price will probably try and make a push back down. We may already have the foundations for it. We're seeing, although we're still seeing higher highs only just. We had a high over here and a high that only just broke the former high. But just in general, we're seeing price sort of start to round off here. above the 1.2 round number. And once again, since a lot of this movement to the upside was really being undertaken in the holiday period with low trading volumes, we suspect that even if price really wants to go higher, we suspect we might just see a pullback down to the 1.2 area and maybe even further down if we're to close this weekend gap over here. So for now, even though we're seeing some very strong moves to the upside being posted in this market, we do believe that momentum to the upside is not going to be very strong going forward in the weeks to follow. Simply based on the fact that we're at some very significant long-term resistance levels, and we also have a weakened gap that needs to be filled. And price may just attempt to try and do that and also find resistance at the long-term resistance level. So finally, we look at the 10-year Treasury note futures market. Now, this has been one market that even prior to the holiday period was very, very sideways and choppy, and for the most part just indecisive. And heading into the holiday period, that momentum should really be expected to continue, and that's precisely what we were able to witness over the past couple of weeks. When the trading volumes were low and volatility was high, the market continued to be, for the most part, indecisive, although we did see some strong moves in this market. If you remember, when we last analyzed this market, it was around the 124.40-ish, 124.50-ish area that has been very important for this market for the period that it has been sideways, because it's been chopping up and down this level a lot. The first major development, and really for the most part the only major development that we saw for this market, was a very decisive and strong move away from the 124.50 level and the 124.40 level, which is important because if this market is to develop a directional bias either to the upside or the downside, it will need to make a decisive and a sustained move away from the 124.40, 124.50-ish support and resistance levels that really have been acting as a magnet for price again and again. So the first time that we had been excited about a move away from the 124.40, 50 area was the move around here, but it really wasn't able to sustain itself at all. You can see the price really pulled back very sharply again into the level, and then just continued to pull back again and again to the 124.40 area this time, which really got us believing that the market just continues to be sideways. But over the last couple of weeks, we actually saw a very strong down move post, and the most important part to the move that we made to the downside here was the fact that when price tried to pull back against this down move, we saw price hold as resistance at these former lows over here. What this means in the grand scheme of things is that if price continues to, for example, make a move to the downside from here, pull back, and then hold as resistance at these lows over here, we could have the foundations being laid for a more extended move to the downside for this market, which would be a refreshing scene for traders trying to analyze this rather indecisive market, because then we would have pretty much the foundations of a down move. We'd had a move down, a consolidation phase, then a move down, then a consolidation phase, then a move down, and so really in the bigger picture, we would really have some lower lows being printed. And who knows, as momentum continues to build to the downside, we could even see a lot more strong and decisive move down for this market in the future. But that kind of remains to be seen. Especially a lot will depend on how the market unfolds in the following week. If we see a strong move post to the downside, price pulls back and holds as resistance and continues its way to the downside, we, as we said, we will have a bias to the downside for this market. We would suspect that we have pretty much the foundations of a down move here being posted for this market.